Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's Friday, October 20th. We got kind of a light day today. We'll jump right into it, though. We got the existing home sales for the month of September. So August, we had 5.35 million existing home sales for the year to date, or on pace for that. And it was supposed to dip down in September to 5.3. It was a forecast, and it actually went upwards. So good surprise there, to 5.39. So obviously better news than we expected here. So let's jump over to headline news here. Stock market's up. Dow's up over 100 so far this morning. We got earnings reports. Nothing really standing out in earnings report, but the biggest thing that's paving the way is the Senate last night passed the budget blueprint, which is basically will pave the way for the tax reform that we've been kind of waiting for. So that's creating a lot of optimism in the stock market. Those will help corporations and more businesses to create more profits and hopefully even more jobs. Also, the market kind of switched up a little bit yesterday. Bond market kind of rebounded a little bit after being down quite a bit. Regards to another Fed possibility, Fed chair possibility. Jerome Powell, he's currently a Fed governor and interviewed with Mr. Trump, and basically now again, some people are saying that he's now the favorite. So, and he's a bit more of a dovish side. So, to continue, the movement of the markets the other side kind of helps out. So they're going to be less. What that means basically, they're going to be less inclined to raise rates and let businesses kind of look here at how this is affecting the bond market, and it's not liking it whatsoever. As you can see yesterday, after the Jerome Powell came out, we were way down here below this resistance level and pulled way back. So we had a nice reprieve from that. But today we broke below that, and now we're even breaking below the 200-day moving average. We're down currently about 27 basis points, which translates to worse pricing today. So we're worse than we were yesterday in terms of pricing for interest rates. So they're on their way up. Now, this could potentially be, not, I wouldn't say catastrophic or anything, but it definitely doesn't look good for them. So we're starting to see this trend obviously going downwards. Our next resistance level is quite a ways down. It's down to the 102.50 range, and right now we are currently about 102.65. So we got a little ways to go until we can hit our worst levels. Today we for the yields, 10-year yields here, we're still above the 200-day moving average. Right now we're testing about this resistance here, about 239 level, and if we break above that and go above the 240 level, we got a long ways and rates will continue to worsen. So this is something to keep an eye on. We again, as you can see, we're up to about 230, I think 8 right now, 2.38 on the 10-year Treasury, and it's knocking the door to break above the next resistance level or ceiling. And if it does successfully do that, then rates will continue to worsen. So be cautious out there if you are refinancing or buying a home and haven't locked in your rates. Just be a little cautious as we are moving forward. So things are looking a little more positive, which translates to, again, a little higher rates as money's shifting from the bonds, which are more conservative, to something more equities, a little more risk averse to get the higher yields. All right, so that pretty much wraps everything up. I hope you guys have a great, wonderful weekend here. And but if you guys want to get some more updates, just come over to Twitter. You can find me on my handle at Mike Bjork. I do post more content throughout the day. So if you want to get more updates and other things like for real estate related, just come on over. You guys have a great day. Thanks so much for watching, and we'll see you guys on Monday. Take care.